Hello, welcome to Al Stock Trades. So, this is a late night live. Actually, I wasn't planning on making this video. I just wanted to kind of update you guys, um, you know, just to show you another little data point for all of our members on the stock terminal and our mastering stock market course and bundle. We're going to be including graphs like this on our output on our proprietary brain machine model. Essentially, what's going to happen is you type in the ticker symbol and it'll show you like a graph, and it'll basically tell you the sentiment of how people are essentially viewing the company. Now, this is not just scanning a Reddit sentiment. This scans everything. This scans literally the stock, like literally the stock, and it's really, incredibly reliable. So honestly, people, honestly, some of them just trade off of this. So I wanted to point something out really important, something that, I chuckle about, and also kind of like, just, think about, something that I just kind of think about. So if you go here, obviously this is the daily sentiment score and a 7-day moving average. So it's, nothing really complex. The only complex part of it is the machine learning algorithm, where it essentially dives in to find the stock sentiment. But I want to, show you something really interesting here. So if you look at December of 2022, and especially here, you can look at the stock sentiment here and the stock sentiment here. So you had a starting negative sentiment and essentially a following negative sentiment, a starting negative sentiment and a following negative sentiment. So in December, a lot of investors were fearful. Okay. And if you go ahead and look at December, look at that fear. Just look at that fear. If you would have, essentially, be greedy when others are fearful, that's a 42.53% gain. Being greedy when others are fearful literally would have brought a 42.5% gain. Okay. So in this regards, as you can see here, ladies and gentlemen, I always don't like to follow the crowd. If the crowd is really happy, I tend to be a little bit cautious. If the crowd's very negative, I like that. I love that. We also had another one in October. So if you looked at this was October, October 20. So let's go ahead and look at October. Right here, again, right there, and we got a nice little bump there. And obviously, you can use your technical analysis, support and resistance, and all these things. But just look how amazing just this negative sentiment is. Just look at that volume bump and look at the negative sentiment, and you can see how that just being fearful when others are greedy and being greedy when others are fearful is by far the best advice I've received from learning about Warren Buffett. It's interesting because if we were just just fun research wise, if we were to go to Clover and we would just go to new, okay, and I know this is a pretty daunting task, going down all these posts here, but if we kind of go down here, and I don't know if they give you the dates. It says 8 days ago. I guess 12 plus 10, maybe like 20 days ago. Let's see, what would the sentiment be for Clover, right? Because we had a lot of negativity on this, and obviously it reflects this graph, and this is why retail investors lose. I mean, I got so much hate during this time. I got so much hate, and so much like just complete disrespect from people, which is fine because it's obviously okay because that's just how the internet works. But it's just interesting just to see how ugly people can get when the stock market crashes, and I really like to and will incorporate this data within our model to use their energy as a form of a contrarian indicator to make money off of their negative energy. Um, so, uh, so I don't know if the mods removed a lot of these comments, but I remember saying, scammers, this is a big scam, or approaching the mark of negativity here. And I also block a lot of them, so maybe I should probably use another account or something. Um, my older one maybe, but there was a lot of like just really really bad. Yeah. I know it's scary and with a lot of FUD. There's just so much FUD here, and I just find it so interesting. Good morning, Daniel. Good morning. I just find it so, and it's still it's 11:30 here in Arizona. Um, I remember seeing so many comments. I can't seem to find them, but I was just really, really, really like one person was saying, I sold and I'm going to short this company into the ground. Literally, there was a comment in here. I don't know if you guys remember. There was a comment on this Reddit page and it said, I'm going to short this company to the ground. And literally, it was right around this time. Imagine if someone shorted the company right now, they would be eating literally crap with their two hands, you know? So, I'm going to try to see. Yeah, you guys are gonna if you guys help me, oh yeah, here it is. National Suicide Prevention Lifeline. So it was 20, literally, someone placed this 28 days ago. So that was December 16. Look at that. Right in this negative sentimental area. Right in the negative sentiment. Okay. We're officially going below $1. $1. Hmm. Um, just these, memes, which is fine. It's just funny way people, that's, Clover crisis and how to get out of it. Good, so, you know, we're, who's losing more money than me? It just, it's very true. Emotional investors. And yeah, even this guy caught on to it, bro. So much FUD. I don't know what to believe. Yeah, look at this. They got sinking ships going on. I mean, holy moly! And this, Captain Sergeant here, it's just it's a wild ride here in Reddit. I tell you, it's a wild ride. We're gonna see Barney here. Maybe I should dress up in a Barney costume and hold a clover leaf. I'm sure that'll be fun, right? So honestly, guys, uh, uh, it's definitely interesting to see this here. Um, it really follows suit with this negative sentimental analysis here. But yeah, I hope this is very helpful. This type of data unfortunately costs money, so we're going to go ahead and design it and implement it within our brain machine, our software, and it'll be very useful. You'll be able to do any stock, Tesla, PayPal, whatever the hell you want. I do believe now we have so many participants in the market and so many retail investors that we can use them. So it sounds so terrible. Like I feel like terrible, but this is business, right? We're in it to make money here, right? We're not in it to just play around here, right? So we can use essentially their negative sentiment, their negative energy, and essentially do opposite of that. Obviously, there will be some filters that we're going to obviously check. Like, okay, well, if we do opposite, we can check the technical analysis, the 200-day Fibonacci support resistance. Then we'll go through another filter. Is the company a good company? Are the gross margins increasing in the net income, free cash flow, intrinsic value calculation? And essentially we'll go through all those things, and if all the puzzles align, then we'll take the shot. And yeah, this will be very cool. So I hope this was very helpful. I just wanted to kind of give you another data point. I always try to add something new, add something to increase your horizon. A lot of retail investors, unfortunately, when they kind of go through looking at a company, they just look at it through a monocular lens, just one little piece, when in reality, an investor needs to look at everything. In medicine and medical school, I remember my first year, I used to always go to the diagnosis, and they used to yell at me. They're like, "Yes, I know you came prepared, Al, but this is easy. This is your first 2-3 months of medical school. You need to have a broad and differential diagnosis. What that basically means is you need to have more than one diagnosis out. Yes, you got it, okay? But when a patient comes to you in the real world, you're not going to know what the hell to do. They're going to come in with all these symptoms and you're going to have to figure it out, right? And if you broaden your differential diagnosis, then you can potentially be able to solve it versus, I used to always go to the answer, and it's a bad process of doing that. You have to go to a process. So that's the problem with investors. Retail investors, they just kind of go in and just look at one thing. And when it comes, time for the real world, they lose. And just imagine how many people sold near here. In fact, if we were to go to, I'm not too sure, public.com, and if we, I don't know, maybe like public CLOV Stock, maybe, I think that one. We can look at who sold and who bought Clover. And yeah, like look at these people here. I don't know if this updates a lot, but a lot of people sold for a loss. This person here sold on January 6th. They lost 40%. This person sold, lost 40%. It doesn't update you on more than a couple of days, but yeah, dude. I mean, this is what happens, guys. I mean, this is the stock market, man. It's hard. It's hard. Honestly, there's a little contract here I made on a video, but I took this contract from Benjamin Graham, and I can read it here, and then we'll sign off. Essentially, Al Stock Trades, hereby state that I am an investor who is seeking to accumulate wealth for many years into the future. I know that there will be many times when I will be tempted to invest in stocks or bond because they have gone or are going up in price, and other times when I'll be tempted to sell my investments because they have gone or are going down, as you can see on the negative sentiment here. I hereby declare my refusal to let a herd of strangers make financial decisions for me. Ladies and gentlemen, these are all herd of strangers, okay? I hereby declare my refusal to let a herd of strangers make financial decisions for me. I further make a solemn commitment never to invest because the stock has gone up and never to sell because it has gone down. Instead, I will invest blank amount of blah, 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 blah. Here's a diversified portfolios, dollar cost averaging programs, mutual funds, and you can put them here. And you can put one here. You can put lines here too. I will also invest additional amounts whenever I can afford to spare cash and can afford to lose it in the short run. I see, that's a very clear one here, okay? I hereby declare that I will hold each of these investments continually through at least the following date, which must be a minimum of 10 years after this date, blah, blah, blah. The only exception, there's obviously exceptions to any rule, allowed under the term of this contract are a sudden pressing need for cash, like a healthcare emergency or a loss of my job, or a planned expenditure like housing down payment or a tuition bill. Ladies and gentlemen, this is how Wall Street tries to get people out of markets. They try to make you lose your job, kind of screw you over in that regards. For me, I want to add one thing, at least for me, is when the fundamentals of the company have changed. All right, I am by signing below stating my intentions not only to abide by these terms of this contract, but to reread this document whenever I am tempted to sell any of my investments. This contract is valid only when signed by at least one witness and must be kept safe that is easily accessible for future reference. And here it is, guys. Here it is. So the question you have to be asking yourself is, do you want to be an emotional investor or not? In fact, even on my Discord, I did some analysis on the conversations, and I found a similar trend. I found a similar trend. More so was only like 1%, 1 to 5%. The rest had this engraved in their mind. But needless to say, not all people, even when they are educated, I can educate you on how to fight a war. I can educate you on how to essentially fight in medical school and in residency. They basically say this important thing that really stuck with my mind. They said that, when shit hits the fan and you have to save a life, and the patient's life is literally 5 to 10 minutes away from dying, you basically fall down to your shittiest like you're not performing at your best. So you fall down on your training. You fall as good as your training is, right? So, that's why I always kind of preface, always learn in a market, always learn on a downtrend, always learn on an uptrend. When there's a bull market happening, always try to pressure yourself and learn, because, if you train yourself and when shit hits the fan, you're ready to fight. I mean, let's not lie, guys. I mean, Wall Street treats stocks as not cash. It's just fugazi bullshit numbers. A stock could be trading 30, 40% undervalued. It doesn't mean anything. Honestly, it doesn't mean anything. It could literally go up in one day based to its intrinsic value. Remember, true value is not equal to, stock market value is not equal to true value of the stock market. Remember that. True value does not equal. And the reason why is because of market manipulation. Market manipulation. It's that book I read to you guys. So we always try to educate. We always try to share with you what others don't want to share. This is a game. Half of it is emotional. Half of it starts with your mind. If you don't have a strong mind, you will not have a strong body, and vice versa. And unfortunately, you will make bad decisions. So I hope this was very helpful. I wanted to kind of basically slow it down and just talk about this just one graph here, because there's so much can be taken from this. So many emotions came through here. Dopamine releases and anger and amygdala's firing. And I just find it so interesting as someone who loves neuroscience, right? And as someone who's aspiring to become a brain surgeon. So this is definitely very, very intriguing to me. I really do love it. Okay, guys, I hope this was helpful, and I will see you on the next one.